All right. So basically, this is my first YouTube video. Um, I will be going over a lot of just main basic things. So to start off, basically, I'm going to be going over, so for trading, for example, obviously, I'll go over how I've been doing so far. So far it hasn't been that great. I can't lie. Um, so to start off in March, I blew a good 4 accounts on Lucid Trading. That was not good. So $88, $88, 82, 82. Then April, I spent 50 on funding traders. So first two in March actually were 50K accounts, and then the other two are 25K accounts. Then funding traders was just a 5K account. Um, sorry, yeah, I said 50K first two, then 25K the second two, then a 5K here, and total ended up being 391.88 so far. Hopefully, I can turn that around. Um, I know for a fact that these first four were just because I was not knowing what I was doing. I didn't know what I was doing a lot. That's for sure, 100%. But we'll turn that around. Hopefully, that was just some rookie mistakes. I don't know what the hell was that, but after becoming 18 in March, that all happened, anyways. We're on to this one right now. I'm a 5K account right now. So far, I'm at like 4,900, like $10. We'll see in a second there, but that's what it's looking like so far. So I'm gonna go over my strategy now. So basically, what I've been doing strategy wise is first thing was identify session highs and lows as well as previous day highs and lows. So I identify those, and those are my ranges of which I'm going to go in towards. I'm going to be looking at. Next thing is going to be marking out high time frames, sweeps of liquidity, as well as fair value gaps. So I'll look for those a lot, especially fair value gaps. I'll look at the unfilled fair value gaps, see how those are trading the market and aiming which direction it's going to be, and that's where the daily bias comes in, as well as the high time frame bias. So that's basically where I'm going to be wanting to see if I'm going to be trading bullish that day or bearish that day. Next, we look for session high or lows to be swept. So same with the high time frame, and then that's where we look for our change of market structure to form a new range. So basically, what that means is when market opens, say like 9:30 or whenever I decide to trade, whenever the market opens in that session, we'll be looking at looking for a sweep of liquidity from the session high or low, previous session highs or lows. And from there, we are going to wait for price to make a new range. Once it makes that new range, that's where we are going to look for a low time frame confirmation and change of structure. So we will keep in mind our high time frame confluences as well as we dive into smaller time frames to look at change of structure and confirmation as well as continuations. So inverse fair value gap for change of structure and fair value gap for continuations there. Then we enter in hopes to reach draws on liquidity. So let me just go over a couple things here. Perfect. So yeah. So here I already marked out my session highs and lows and my previous day highs and lows. Previous day lows down here, previous high day highs up here. This is just a random example. So we can see this is a 15-minute time frame, by the way. Market opens around 9:30 right here, this candle right here. We come up high, sweep this previous day high, then we create a new range. This new range here, I'll look for my equilibrium to get filled. Comes up into my equilibrium. That's perfect. That's beautiful. So in this case, we would scroll down to a lower time frame, like a 5-minute, for example. Perfect. From that 5-minute, holy, it's slow today. From that 5-minute new range, we're going to look for inverse fair value gap, slow sweep. So there's another on the 5-minute time frame, fair value gap, sweep of liquidity, inverse fair value gap. I would enter here, put stop loss just above drawn liquidity, and target a 1 to 2, 1 to 3. But as you can see, it did not hit. I would have hit break even on this trade, which is fine because it happens. But then there's also what we didn't take into consideration, which would have been taken into consideration. That entire time, we are sitting in a 4-hour fair value gap. We can't expect price to just drop below it because we need to wait for confirmation for the close below the fair value gap before we continue lower and push lower. In this case, it reacted off of that fair value gap, pushed higher. Yeah, so that's just one of my examples of how I would trade. That is the strategy that I will be sticking with, trying to keep and maintain, and then go from there and see what else we could do on that part.